Welcome to Motley Fool Money. Thanks for being here. I'm your host, Chris Hill, and joining me in studio this week from Motley Fool Inside Value, Joe Magyer, from Motley Fool Income Investor, James Early, and from $1 Million Portfolio, Ron Gross. Gentlemen, good to see you as always.
Too, Chris.
Oh, we got a big show. We've got earnings from Intel, GE, and a whole lot of big banks. We're going to head to Detroit for a report on the North American International Auto Show, and as always, we got a few stocks on our radar, but we are going to begin today with big technology. Shares of Intel down Friday morning after reporting fourth quarter earnings. And James, the headline on CNN's website, Intel profits sinks 27% on dreadful PC sales.
That's not a happy headline.
That's
Chris.
not a happy headline.
No, it is not. Intel
Catchy,
is,
though.
It actually is a recommendation of my income investor service, so it doesn't make me any happier to see that. In a sense, it's the same news, different quarter. To some degree, Intel has been bumping down its profit guidance. PC sales are declining now. Kind of your typical lumbering tech giant. It reminds me a little bit. This is sort of an unduly ridiculous analogy, but around here, Chris, we
so
have
please do.
the C&O Canal, which connects the Chesapeake Bay to basically Lake Erie, and it was built by generations of workers so a horse could pull a boat all the way there. And by the time they finally got done building it, the railroad got invented. So nobody needed this anymore. And it's not that extreme with Intel, but they built their whole system around microprocessors. And they got blindsided by the tablets and the phones, and ARM is basically eating their lunch. In the growth area, they're still a dominant player. Just the growth is where it's at with technology.
Joe, what do you think of this? Because, I mean, to James's point, they are the dominant player in the space. They have a lot of cash, and yet, I mean, you look at all of their divisions, chip sales rose only in data center chip sales. All other divisions fell.
It's a classic Canal microprocessor play.
Yeah, I think it's the old story that every investor knows.
Now, that's funny.
I think James is spot on, and I was a little surprised data center was only up 6% in the year, and this is supposed to be the business that's really kind of lifting these guys up. That's definitely troubling, and Intel spent about $9 billion in acquisitions in 2011, so when you see revenue falling in 2012 by about 1-2%, that's also troubling.
James, would you call this a value play instead of a growth play at this point?
It's riskier. It's definitely riskier. The big question has been, how can Intel get some kind of a stake in the tablet market? Their chips are great. They just use too much power. They say they're close, but if they do, in 5 years, Intel could totally dominate ARM. If not. It's more of it's a binary play.
Yeah, I mean, this isn't like a Best Buy where they're just totally behind the eight ball. There is a real business here, and they do have shots to get in the game on mobile.
But if you're Qualcomm, or ARM Holdings, aren't you looking at Intel maybe for the first time ever and thinking, oh, you know what? They're not bulletproof.
It's like that point in Rocky IV where the Russian starts bleeding.
Intel has a lot of money, though, Chris. I mean, they're like 10 times bigger than ARM. It reminds me a little bit of Netscape Navigator and Internet Explorer. At first, everything was all Netscape Navigator in terms of browsing, and then Internet Explorer just kind of started with like a 2% market share and just muscled them out.
Boy, Netscape, Rocky IV, Canal analogies. We are off to a big start here. General Electric's fourth quarter profits came in higher than expected. Shares up 3% Friday morning. Ron, I think a lot of people think of GE for the jet engines, the wind turbines, but GE Capital, the finance arm, is really driving this boat.
For a long time, it was driving the boat, and it still is a big piece. It's about a third right now of revenues and operating profits, but they've been making a real concerted effort to pull that back in and shrink that part of the business. And the industrial side is really doing quite well now. All the industrial segments turned in good numbers. Profit was actually up 13% if we adjust for some non-operating type earnings like from the pension plan. So they're doing a real good job of shrinking GE. And the strength in the industrial segment, perhaps, is a nice bellwether for the economy. So good numbers from them.
Why is it so embarrassing to be a bank, though? I guess is part of my question. Obviously, during the financial crisis, it was embarrassing, but now isn't it doing a little better for them?
It is, but I think they didn't want to be so heavily reliant on a quarter by quarter, or even for whatever time period you want. They wanted to really get back to their industrial roots.
This is a $230 billion company, and I'm not saying that they are like Wall Street banks in the way that Wall Street banks can be pretty opaque in terms of their balance sheet. I don't think it's like that at all. And yet,
it is kind of like that, actually.
Well, where I was going was this company seems almost too big to be attractive to invest in. I'm not just talking about the stock performance, which has just sort of lumbered along over the last few years, but it really just seems like, I don't know, Ron, is this something that is it at all attractive to you as an investor?
You know, it's really kind of the blue chippiest of kind of blue chips, just kind of this bellwether stock. A lot of people used to like it for the dividend, which is still about 3.5%, let's call it. It got cut back in the day, 2009, which was a big deal for investors. They were very unhappy to see that, especially those who own it solely for the dividend yield. So, you know, it's not a tremendous growth stock or anything, but it's going to lumber along with the economy and the market in general.
And just for perspective, the standard gripe is that it's so big and complicated, nobody has any idea what's going on, right?
True. And I mean,
imagine following GE.
It's kind of company that investment bankers love because, you know, you break it up a little, you put it back together, you break it up, you know, it's a never-ending cycle.
On last week's show, we talked about the FAA's inquiry into Boeing's 787 Dreamliner, and in airline parlance, we have an upgrade. The Dreamliner has been grounded. It was deemed not safe to fly until the fire risk in the batteries has been resolved. And Joe, this is the first time since 1979 that the FAA has grounded a fleet of commercial aircraft.
Yeah. Yeah, I mean, it's definitely a black eye for Boeing, and we talked about this on the show, but for perspective, only about half of Boeing's revenue comes from commercial airplanes, and within that commercial side, there are a lot of different planes that they service, so it's not like the game is over for them, and that's why the stock hasn't reacted in a very sharp way. That said, I think when you look at the ridiculous delays on the Dreamliner and the poor PR and poor execution with this, that at large, you have to look at this business and definitely question management's capability.
Would you fly in a Dreamliner?
I would.
Well, pretend you had to go to Australia. Pretend the standard ticket is $2,000. What would your price be for a Dreamliner?
I would take it. I'd
No,
have my wife fly on the
you
747
pay full
so she
fare
doesn't
for a
go down
Dreamliner?
in flames.
I do it for half price.
Last week, one of the things you mentioned, Joe, was the fact that right now there are 50 Dreamliners that are out there. Of course, they're all on the ground. But there's a backlog of more than 800 that have been ordered. At what point do some of the airlines that have ordered these planes start to go, you know what, thanks, but no thanks. We're going to talk to the people over at Airbus.
Well, the 787 is a huge leap forward in terms of airplanes, so they're happy to wait. And, a way to think of it is, well, it's probably going to take years for them to fill my order. By then, they'll have already figured out all these kinks.
eBay's fourth quarter revenue up 18%. The shares this week hit their highest point since 2004. So having just hammered you slightly on Boeing, I will now allow you to take a victory lap.
All right. Yeah, well, this is a killer quarter. eBay is just firing on all cylinders. When you cut into the numbers, what especially looks good is that on the marketplace side, growth in number of users has accelerated for 6 straight quarters. Mobile is booming. They're doing very well with PayPal. Pretty happy shareholder.
Yeah, Ron, to that point, we see a lot of companies that are struggling with mobile, but when you consider the fact that mobile transactions doubled year over year for eBay, it really seems like they're just crushing it.
They really are, and I think it's still in its infancy, obviously, mobile transactions, and if they can get out there at this stage and be solid in it, I think that the future looks really, really bright. I was curious, Joe, you still like the stock at these levels?
I do. It's not cheap. Definitely not the bargain that it was a year and a half ago, but I'm a happy long-term shareholder.
Have you ever bought anything on eBay, Ron? Like bidding for something, not just the...
Yes. Do you remember
Like a
Wacky?
building?
Do you remember Wacky Pack stickers back in the day?
Sure,
Right? They had
I'm old. I remember those
right.
things.
So I bought an uncut poster of Wacky Pack stickers for my brother-in-law's birthday, which is actually, we're celebrating his birthday today as well, his 50th birthday. Happy birthday, Jeff.
Happy birthday. Steve Broido, our man on the other side of the glass, you have to have bought something on eBay.
I bought this man.
What is that?
This little
Okay,
Imperial...
this is a radio show. People can't actually see what you're holding up.
I remembered. It's a little Star Wars Imperial Stormtrooper guy, or he's the... I don't know. I don't remember what his role was. He's in the Death Star. He's got that funny little bowling hat on.
He looks irritated, too.
He does look mad. He's got a little gun. He sits in the studio and protects me. So I bought him on eBay.
You're not getting that kind of insight on Bloomberg Radio. That's all
The
I'm going
funny
to say
thing is
there.
that's actually not even the oddest thing in his studio.
Coming up.
That's true.
Coming up, what will Facebook's latest service mean for its competitors? Details next. You're listening to Motley Fool Money. Welcome back to Motley Fool Money. Chris Hill here in studio with James Early, Joe Magyer, and Ron Gross. Guys, this week Facebook unveiled Graph Search, and what an elegant name that is. A search engine that works within the Facebook ecosystem, not on the web. Ron Gross, some people are saying this is a Google killer. What do you think?
I think it is not a Google killer, but I think it's important to say this is in such its infancy. We don't know what it will turn into. It's interesting in its infancy even to be able to search your social network favorite restaurants of your friends or friends in certain areas, whatever you want. That's interesting. It's no Google killer. Google is into this a little bit with Google Plus and Search Plus Your World. They have it's called, but you're going out to the web to search on Google. Facebook is not there yet. But what this could be 5 or 10 years from now, if they make some improvements, could be really interesting. A lot of it depends on what you tell Facebook. A lot of it's going to depend on the like button. A lot of it's going to depend on what you put into your profile. I would imagine they're going to start asking you questions to make this more robust, and that could get interesting.
Joe, when the event was going on, I had a graph up of various stocks, and you could see Google wasn't getting crushed, but Yelp was. And I think the immediate reaction among investors was, wow, this really drives a stake through the heart of Yelp. But since then, Yelp has rebounded, and I don't know. I agree with what Ron said, that this is in its infancy, and it seems like a positive step forward, but it's hard for me to get my head around how this is going to be some kind of big either game changer or money maker for Facebook.
Right. So something like Yelp offers a lot more depth in terms of knowledge. So an example, I searched for Thai restaurants on Facebook, right? How many of my friends have suggestions or likes for DC area Thai restaurants? Not a whole lot. And no offense to my friends, but I wouldn't consider them world-renowned restaurant connoisseurs.
I've met his friends.
You're in there. Now, with Yelp, I bounce over there and I search for Thai restaurants in DC, and there are over 150 restaurants that come up. Each of them usually has hundreds of reviews. So there's a lot of depth there that I just don't get from polling a couple of my friends on Facebook. I agree that it's interesting, but I think they're a long way from, slaying these individual verticals like a TripAdvisor or a Yelp.
What does the graph in the name mean?
That's an interesting question. If you
thank
kind
you.
of, I'm going to get this wrong, but if you kind of graph the way searches can done, one person to one person to you and another person, then you to him, you enjoy the transitive property, I've heard.
I see.
You can kind of draw a graph and see all the different interconnections, and they kind of add up, if exponentially may not be the right mathematical term, but, quite quickly.
Gotcha.
And what's going to be interesting is if there eventually is a button that says, you can search on all your friends' data, but here, click this button if you agree to be able to be searched on friends of friends and friends of friends of friends. And then you start really racking up the number of people.
Just to wrap up on Facebook, the stock still trades below where it IPO'd. What do you think of the valuation, Ron? Is it interesting, or you're still waiting?
I would say as a value investor, it's not certainly your classic value investment. But if you suspend that for a moment and think about what it potentially Facebook could be 5 or 10 years from now, it might be interesting.
Most of the big Wall Street banks reported earnings this week. Bank of America and Citigroup's fourth quarters were somewhat dismal. But, Joe, both Morgan Stanley and Goldman Sachs, their stocks hit 52-week highs after some pretty strong fourth quarters.
Yeah.
And as a Goldman fan, I know that you're pretty excited about that.
Yes, I am. Yeah, Goldman, just to zoom in, had a great fourth quarter. Return on equity annualized was around 16%, which is kind of pre-financial crisis levels, which is very nice. But, with these banks, you can't look at individual quarters. You do need to zoom out. And when you're talking about Morgan Stanley and Goldman, I think that things are headed in the right direction for them. We talk about BofA and Citi. There are a lot of one-time charges here. By one time, what I really mean is a slew of continuous one-off charges that they're dealing with.
That countrywide acquisition that Bank of America made,
I heard that didn't work out.
That just gets
Not so well.
That gets worse and worse with every passing year.
It does, but I do think these banks are going to be in a lot better position a few years out from now. Obviously, they're taking their lumps right now, but they are systematically putting away a lot of legal trouble, a lot of bad loans, and they're working their way through this very slowly. And the numbers look terrible as a result right now, but 5 years out, they're going to look a lot better.
The one counterbalance, especially on the consumer end, is Dodd-Frank, which is a complicated piece of legislation that kicks in gradually over time. So you have to ask, if Bank of America and Citi are not doing well now, and this is kind of like a mortgage refinance boom time, what happens when that catalyst goes away and it gets harder to become a consumer bank? They have to make money the old-fashioned way, and unfortunately they're not that good at that.
James, one of the other stories that got a lot of headlines this week, J.P. Morgan Chase also reported earnings, and the earnings seem to take a backseat to the fact that, or the news, that Jamie Dimon, the CEO, had his bonus cut in half by the board of directors. They basically said, look, the buck stops with you. You're the CEO. he got tagged with the London whale thing, and his bonus got cut in half. What did you make of that?
It's a good start. I think the punishment needs to be a lot more severe. I mean, he's a CEO. He's supposed to have CEO-like oversight. He didn't. I think it's good. I think it's good to punish him, but I think we need to start doing that. He should have got no bonus.
And it's still millions and millions of dollars.
Yeah.
Shares of Dell up more than 15% this week on the news. The company is in talks to go private. James, this is something Michael Dell has thought about in the past. Why is the time now?
Well, Chris, as we all know, some things are easier to do in private. It just is that way. You got fewer owners to appease. Dell is in the process of shifting more from personal computers to kind of business stuff like data storage or whatever. In fact, according to the Wall Street Journal, Dell currently describes itself as, quote, an end-to-end technology solutions provider, which means nothing to me.
They want to be IBM.
Whatever that is, right? So to become that, apparently it's easier to do it privately. We'll see. The valuation buyout could be in the mid-teens. Ron, I think you are.
So in 2005, I bought Dell at 36. You think I'll be made whole when this is all said and done?
Mid-teens is not 36, according to my math, but it's at least better than
I'll
nothing,
take
right?
it. I'll take whatever I can get.
And finally, guys, in 2008, Subway began offering foot-long sub sandwiches for $5. It became Subway's most successful promotion ever. That is until this week, when a customer in Australia posted a photo on Facebook of one of the foot-long subs next to a tape measure that shows that the sub is just, in fact, 11 inches long.
What?
I know. Now, some people...
Jared, what are you doing?
Some people, Joe, would say, well, it's 1 inch. What difference does 1 inch make? What do you think?
Well, in this case, I think what Subway is doing is wrong. However, in certain circumstances, I think it's okay to stretch the truth about an inch. When I was on Match.com and my wife and I met on there, I said that I was 5'10". I'm really 5'9 and a half or so. And after a couple dates, my wife was like, are you really 5'10"? Because you look more like 5'9".
Does she measure? Does she measure?
We didn't get to that point, but I was like, no, you round up.
I think this finally proves that size does not matter. Can we all agree on that?
Steve, what do you make of this story?
I thought they used the metric system over there.
Over where?
In Australia. What's this guy doing? This is ridiculous.
Joking aside, if you're McDonald's, you have to be thinking that the quarter pounder is next. You have to be thinking that the next step is someone going into McDonald's.
The measurement police are
Yeah,
on it.
if the
Weighing
measurement
quarter pounder.
police...
It's pre-cooked weight, so it's hard to measure that, though, right?
Well, and again, this is one guy in Australia posting on Facebook. It gets all this buzz on Twitter. I mean, this is where social media just crushes consumer-facing
But
companies.
you know what? All publicity is good publicity. You think this is actually hurting Subway? I don't think so.
See, this is one of the nice things about social media, and I'm not being sarcastic, is that it does highlight when companies take advantage of customers. It's a way for the world to find out quickly and kind of put them in their place.
Do you feel deceived as a Subway customer?
I don't think this was
but I hope my wife
intentional.
doesn't feel the
But I don't think we're saying this was intentional. I think it has to do with how
never know.
each individual franchise or store, I should say, bakes its rolls.
This is a vast conspiracy.
And 11, 12, if you're eating a big foot-long sub for lunch,
Yeah,
maybe
what do you care,
maybe you
right?
should
Yeah.
be eating 11 instead of 12.
As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. So don't buy or sell stocks based solely on what you hear. I'm Chris Hill. Joining me in studio once again, Joe Magyer, James Early, and Ron Gross. Guys, before we get to the stocks on our radar, on the other side of the glass with our man Steve Brodo today, special guest, Major Mitch Rubenstein, coming up from Marine Corps Base Quantico to hang out at the Fool today.
Thank you, sir.
He also blogs for us on the Fool Blog Network, which means, among other things, he's an incredibly productive person. He's contributing way more
He
to
has
the...
no downtime.
Yeah.
He has no downtime whatsoever. Let's get to the stocks on our radar. Ron, you're up first, and Steve will hit you with a question.
All right, Stevie. I got Regis Corp, RGS, an operator and franchisor of hair salons, a very mismanaged company, actually. And so this is an activist play. An activist investor came in, took 3 board seats, trying to sell off some underperforming assets, turn the business around, replace management, and look if they can get the job done. It looks really undervalued here.
Steve, question for Ron about Regis?
Does every hair salon have to expand into the spa services, all these bells and whistles? Can you just get your hair cut, or do I need my nails done and all sorts of stuff?
Sure. Well, these guys are like super cuts and master cuts, so it sounds like they're perfect for you.
Yeah.
Where do you get your haircut, Steve?
Hair cuttery, usually.
All right, so this is right up your alley.
Yeah.
James Early, your stock?
Chris, I'm going with Textainer. This is a stock I've loved off and on. I've loved consistently. I've mentioned my love for it off and on here. The ticker is TGH. This is an income investor recommendation. They lease intermodal shipping containers. These are these big metal boxes you see on boats or on trains and on trucks. And this leasing business has been growing at about 2.5 times the rate of GDP. It just makes a lot of sense. They're the big dog in the industry, so it makes it easier for them to ship containers back and forth without having to move empty containers back and forth. Excuse me. You can ship full loads if you have a bigger network worldwide. And the thing I really like about is these things double as modular homes. After they're used
For
to ship
hobos.
things, people buy them for a couple $1,000. They're only
Ride the rails.
330 square feet, but you can combine them together. It's kind of like this eco-recycling motif.
Steve, question for James?
Is it even possible to compete in this space? It sounds awfully complicated and large.
There are a few big players, and then a lot of the shipping companies own their own stuff. But if, let's say, you ship back and forth between the U.S. and China, you're basically shipping full containers from China to the U.S., and you have to ship the empty containers back to China, which is costly. So if you can plug into a bigger network, it's more cost-effective.
Now, Steve, when you were asking about competition in this space, were you talking about the intermodal transportation space or the hobo space?
The hobo, well, actually intermodal, but hobos, it is a very interesting space.
It's a cutthroat.
It's fragmented, though, the hobo industry.
Joe Magyer, we got a minute left. Your stock this week.
It'll take 30 seconds. to that.
Amazon. I'm guessing we've all heard of it. They report next week. Specifically, what I'm looking out for are gross margins and volume. If they move volume of around 40%, I'd be very happy with that. And if they post gross margins near 26% again, which they did last quarter, it was a big surprise. I would be very happy with that. And I think that might happen because they've been expanding their ad network recently. I think that's a great opportunity for them, and definitely high margin, much higher margin than the retail model has been.
Steve?
Who came up with Amazon Prime, and can we hire that guy or gal? Because that thing is amazing.
Yes, it is.
I assume that was Jeff Bezos or one of the guys at the company, but part of the inspiration for Prime actually was the success at Costco, and they basically ripped that off from them.
All right. Ron Gross, James Early, Joe Magyer. Guys, thanks for being here.
Thank you.
Chris.
Thanks to our special guest this week, Paul Leinert from the Detroit Bureau of Reuters. That's it for this edition of Motley Fool Money. Our engineer is Steve Broido. Our producer is Matt Creer. I'm Chris Hill. Thanks for listening. We'll see you next week.